All right, guys, welcome back to another episode. Today, I have a special guest, Bill Barton. He is a real estate investor. He's been in the game for quite some time, everything from fix and flip to owner finance as well. So we'll talk a little about that. But I like to start with origin story. As you guys know, anytime we have a guest, I want to start with the origin story and hear how he got started, and then we'll dive into some other details and some other goodies. And take it away, Bill. So tell me about how you got started in real estate and everything.
Well, it wasn't actually by accident.
Yeah.
So,
Some people it's by accident, right?
right.
Oops.
Yeah. Some people have a house and they end up in the real estate business. My case was I was working for a living. I had a W-2 gig, and one of my coworkers started rental properties. He started buying rental properties, and that was his game plan. And, he just started bringing it up. Every time we got on the call together, it would be we would be talking more about real estate than the transactions we were supposed to be involved in. And that's kind of how it began. He was very persistent about it, and we had a small team, and one of the guys on the team was one of our technical support guys. And so when he heard what we were talking about, he started building spreadsheets.
Those are addicting, by the way.
Oh
Very
my
addicting.
God, they're terrible.
What was the W-2 job before? What was your?
Oh, I ran a sales team for a technology company,
Okay.
and so it was a very entrepreneurial business early on, and like everything, that entrepreneurialism only lasts so long. As it scales up and the business changes, and it got to be very, very, very corporate at the end. But this was back in I'm going to say 2003, probably 2003, 2004, somewhere in there. And so anyway, he started buying. He lived in Chicago. He started buying properties in Wisconsin and Illinois. We actually had an office in Madison, so he was traveling back and forth somewhat, and just started picking up rental properties and talking about what his game plan was, and what a great investment it was. And then the other guy started sending spreadsheets that had ROIs and all kinds of fun information on, and depreciation and appreciation, and so it's like, that's kind of interesting. And then he was pushing pretty hard for me to start doing real estate. So he found a website called myhousedeals.com, which is still around, and a lot of wholesalers use it for promoting deals. And they had a whole bunch of houses on there for $25,000 to $45,000. And he's from Chicago, so he's looking at this and going, "Oh my God, you got to do this." And so I started looking at it. And most of these properties were down south of I-30, kind of, Beach Street between I-30 and Lancaster, that neighborhood's down there. So I started driving down there, and, it's an interesting drive. If you've never been down there.
Did you carry? We're from Fort Worth. Did you carry your gun?
I did not.
I know. We know exactly what you're talking about. Misty grew up in Everman. I grew up in Irving, but we live in Fort Worth.
Okay. Yeah. I know Everman well these days. But so I started driving around down there, and I was like, well, this looks kind of interesting. So the mistake I made was, I started talking to my wife about this and that. I'm like, hey, you got to come with me. So I put her in the car and I took her down there. And that was the end of my real estate career for about 10 years.
It started and ended that quick.
It started and ended very quickly. Her comment was, I think something along the lines of "no effing way." She goes, "I know how this works. You travel all week, so I'm not coming down here and collecting rent. I'm not coming down here and doing this. I'm not coming." And I was like, "No. That's not how it's going to go." She goes, "Yeah, that's how it's going to go." So
you'll be the one doing all the. You're gone, and
you're gone. I'm going to be here, and we're not doing this. We are not doing this.
That's awesome.
So okay, so kind of put everything on the back burner for almost 10 years, actually, pretty close to 10 years. And but my other buddy, he was buying He kept bringing it up. He kept telling me how stupid I was.
The spreadsheet buddy?
Yeah, no, the sales
The
buddy.
sales buddy.
Yeah, because he was the one buying the spreadsheet buddy. I'm not sure if he's ever bought anything, but he's really good at spreadsheets.
What's his contact info?
Yeah.
Get me off the spreadsheets, man. They're addicting.
So the sales dude was out buying, I bought another house, about once a quarter. He'd tell me, I bought another house. And so it was really annoying. And eventually, I don't know, somewhere around 2011 or 2012, I was like, I got to go back and look at this real estate thing again. So I started searching the web, looking for real estate clubs.
Mhm.
I had just found out about real estate clubs. So I found DFW REI Club, and I started going there religiously every Saturday.
Yeah.
And I did that for several years. And one day it sort of dawned on me that I had kind of attended meetings for a really long time, and I had built some of my own spreadsheets now. And I probably had gained as much knowledge about real estate as I was going to gain without actually owning real estate.
Yeah.
So I have another friend of mine who was a realtor. He was a broker. He was a realtor. He was a real estate investor. He'd done a lot of different things. And so I told him, hey, keep your eyes open. I'd like to buy a rental property, because that was my whole concept. That's really the only thing I knew about real estate, was my buddy was buying rental properties. And now I had been going to Robin and Cindy's meeting. And so I knew a lot. I had a wider perspective, but I was still sort of locked into rental properties is what I wanted to do. So found a rental property, bought one in Saginaw, a duplex, in 2013. And I remember we closed. I went over there the next day, and I saw a U-Haul in the driveway. And I was like, well, that's interesting, because I had, I got the leases and yada, yada, yada. And I talked to the couple that was loading up the U-Haul, and I'm like, hey, I'm the new landlord. They go, oh, yeah, well, we're moving out. I go, well, we have a lease. Yeah, well, I said, you guys just renewed your lease. Go, well, that was just a favor to, Rosie, who sold me the house. We told her we were leaving, but, she really needed us to sign the lease for the transaction.
Man.
I'm like, what? So I got a really good learning experience, like the day after I bought my first rental property. So then we decided that we were going to, do everything ourselves. So huge mistake, but,
How'd the wife feel about it at this point? 10 years later.
It was in Saginaw, so she felt great about it. Yeah. So that seemed to be kind of the key difference maker.
Yeah, the area.
The area where it was located. And so it was a family affair. I have two boys, so the boys and Angie, my wife, and I went over there, and we, painted and put some flooring in, and, got everything. Took us forever because we're doing it like on the weekends.
Right.
And so we finally got it done, put a sign in the yard, got it rented right away. Googled for a lease, found a lease online, and started managing a duplex part-time. And then my real estate buddy said, hey, I told him I was interested in acquiring more property, so he found me a fourplex in Euless. So I went over, looked at it. It was in a community of 16 fourplexes. So, there was 16 buildings altogether, but they were all individually owned. Now, there was an on-site property manager that officed out of one of the units. And there was an HOA that kind of managed everything. And so I was looking at it, and I was going, on-site property manager, on-site maintenance, this looks like a dream come true. So, wrote another check, bought another property. Shortly after I bought it, we had the owners meeting. and they were having elections for new board members, and the treasurer was the person that sort of, managed the property management. So the treasurer position came up, and not surprisingly, there weren't just people clamoring for that position.
It became you.
And I volunteered. I thought, if I'm going to figure out what's going on, this is probably a good position to take. So I got elected. As I recall, I was the only person that put their name in the hat.
It's like I wrote the check, and now I'm doing the property management stuff.
Exactly. And that's really where I gained most of my property management experience, because what it turned into is managing 63 units, even though I only owned 4.
Mm-hmm.
And the on-site property manager was a little bit of a nightmare. She lived there. I guess in the course of interacting with her, she showed up when she felt like it. And since she lived there, she didn't really feel like the rents needed to increase.
Oh.
And a couple of her drug dealer buddies, also, she got them moved in there. So she had her whole little, circle of friends going on.
Yeah, hookup.
And so I kind of I figured out what was going on, and I informed the owners what was going on, because, the owners were like me. They were like, fine, just send us money every month.
Yeah.
Everything's good. And, but I sort of had this vision that the rents could go up, and, the property could be improved, and we could, appreciation, all those fun real estate things, but that it needed to be operated a little bit different, and we needed a little different clientele in the community in order for all those things to happen. So I set about doing that, and we accomplished a lot of that. We got a new property manager. We raised rents. We kind of operated it like more of a small apartment community than individually owned. We had, we got more of the owners to buy into the property management. It wasn't mandatory that they use the on-site property manager. They could collect their own rents and so forth. But the maintenance guy that was there, they could contract him individually, or they could contact him. So there was it was an interesting situation. And what I learned was that, that's not probably the ideal type of property that you want to buy into.
Yeah.
Because it's a lot of work, and it's a lot of cat herding. And unless everybody has sort of the same goals for the property, it's very challenging.
Yeah, because you don't own the whole thing.
You you own one little piece.
You've got one guy who says, "Well, I don't want to fix the toilet.
I don't want to. I don't want to fix anything.
They put a duct tape on it. Yeah. There's or they don't want to. Their make ready is horrible, and
yes,
so you're struggling to get that. That's such a huge part that I know we had to learn too. Like how important property management really is on that side, because it's the item that most people don't want to deal with or don't. But it's can be what makes or breaks the bank on the entire thing.
It really is.
And I mean, you're dealing with drug dealers and having to kick them out. You're having to mess with the property manager that doesn't want to raise the rent.
Yep.
And it just makes it so much harder.
So it is very challenging when you get into those situations. So, we made the best of it. We did raise rents. We did get some, we did swap out some residents for a better resident that was more reliable, and so forth and so on. But still, without sort of a consistency across all of the properties, and every owner set their own rent. The manager really didn't have any control over that. Yeah. So, you had a disparity, and so you still had some challenges.
Yeah, that makes it harder too, because you got this person who's like, we're going top of market. This one says we're barely going to go anywhere.
Right.
Leave them there.
You're kind of competing.
We're not fixing anything. We want to go top of market rent, and we're not going to repair anything. And you got the same residents living in the same property.
It's almost better to split it up completely,
yes,
and just get rid of the property management part.
Yes.
And just say, hey, you guys are on your own. I'm going to make sure my stuff's taken care of.
Well, I think that's sort of the direction that the property's gone since I left.
Yeah.
So while I was doing that, I was, this was still part-time. I was still working full-time. So I was still just, going to Robin's meeting on Saturday and swinging by the property. And when I would be in town, I would go by the property and check in and that kind of thing. And so then my realtor buddy, again, he said, "Hey, I found another opportunity for you." It's like, okay. So more townhomes. So this is a 54 townhome community, and there were altogether there were 19 of them that were available. And so my thought process going into this was, all right, so in this property, I have an equal voice with every other owner. In this property, I'm going to buy more, so I have more say about, because again, it had an HOA and yada, yada, yada. So the other comment I have to just make at this point is that I had spent a couple of years going to real estate meetings, but when I got started down the path, I basically evidently forgot everything that I had learned. Because it was the shiny bauble. It was the thing right in front of you. It's like, oh man, I can buy these things for like $50,000 a piece. This is a deal,
One thing I think that this kind of a quick circle back was that two things. I know just coming up, I always like to share with friends, like, hey, you should get involved. You should get involved. And they'd never, they almost don't. But you listened. You actually.
I did.
You were one of the very few that was like, what are you doing over there? And then it turns into something bigger as you go along. And then you have the spreadsheet guy who, like you said, he's probably never bought anything. But the difference between that, like just kind of circle back to that, because that's something that, and I know you've probably seen it at the club, or there's guys that go and they pay for stuff and they never do anything.
I have several examples.
Yeah, and
people.
but they do the spreadsheets and they make it all this and that. But it's almost like you've got to be, I don't know, just dumb enough to go out and take action. Versus
that's how I would describe it.
Yeah, you got to be just dumb enough to take the action, because everyone who's like they're super smart, they stick to the spreadsheet, the comfort, and I mean, it's not surprising to hear that the person with the spreadsheet probably didn't buy anything,
right?
Versus the other person that are in sales, they're just like, I don't really know exactly what I'm doing, but
I'm going to figure it out.
Yeah.
How tough could it be?
Yeah, how hard could it be?
I think that mentality is exactly, when you look at who's doing stuff.
Yeah.
There's always sort of a lot of that mentality that's in their makeup.
Yeah.
It's like, I'm not sure exactly what I'm doing, but I'll figure it out.
Yeah. I'm just dumb enough to go, okay, but at the same time, just smart enough to figure it out.
Yeah.
And you're not going to overanalyze. And
I think, not everybody is successful. Yeah. So, not everybody has the tools to figure it out at some point, or the perseverance to see it through, or, there's a lot of those characteristics that make a difference in this business, because it's as easy as everybody makes it sound. It's not a particularly easy business.
Yeah. It's scary, right? I mean,
every time I buy a house, I still have a little tinge of, oh shit, what am I doing?
Yeah, we go under contract. I'm like, oh shit, oh no, this is a problem. Oh no, man. I'm like scratching, like, just like the days, yeah.
I got a rash,
Yeah, man, because you're like, you got to perform. And
I think those people, they're just so scared about it. They're like, I have to know everything before I take action, and you're never going to know everything.
No.
And so then they never take action.
Yeah, but that spreadsheet looks great.
It does. It has all the answers.
It has all the answers.
Except the one that you forgot to put in the right cell.
Yeah.
That oops. One. The oops.
So you ended up buying into the townhomes. How many of those did you buy? Did you buy a few?
I bought 19 of them.
Okay. There was 19 though, right?
No,
there's 54.
There's 54.
60, so
okay.
Yeah.
Owned about a third of them.
Yeah. So yeah, the other guy had about 13, and then everybody else had 1, 2, 3 kind of thing. So,
majority.
I owned the majority, and you have on the HOA, you have a vote for every unit that you own.
Yeah.
So I had 19 votes out of 54 total, but there were several people that were from out of town that never participated in anything. So, that was sort of my goal of going into that property, was to make sure that I had a voice,
Mm-hmm.
and I did. But I bought them while I was still employed. I bought 15 of them with owner financing from a couple that was just ready to, get out and get on the bus and go to WinStar.
Yeah.
And then I bought 4 of them from 2 different owners, and I used private money for that. But I didn't really, I just bought them. I just financed the purchase price, and they did. Most of them had tenants, not all of them. Most of them had tenants, and so all of my rehab costs were out of pocket.
Right.
So, and that's probably not the best strategy in retrospect
Mhm.
to dive into that with. But, I had a job, so I was like, what the heck?
Yeah.
How tough could this be? And
How much rehab did you have to do?
a lot.
Yeah.
Yeah. So we had, and we had fights going on in the evenings. There was a little bit of gunfire every once in a while.
Yeah.
They are 3-bedroom, 2.5 bath, 40 square foot townhomes. And at the time that I bought them, they were renting for between $625 and $775 a month.
Yeah.
So
Where are they at?
off of Everman Parkway.
Okay.
And so they, it was
By
and
the high school.
yeah, yep,
Okay.
yeah,
Gotcha.
yep.
Hold on. I'm thinking.
Bellshire or something like that.
Belshire and
Mhm.
Farley Court.
Yep.
Wait a minute. I'm trying to. I know my Everman.
Catty corner from the old post office.
And it's a little closer to the freeway than the post office. The post office is a couple streets down.
Is it those apartments? They're not apartments.
They're not
No,
apartments.
townhomes.
There's townhomes on the south of Michael Drive, or on the south
Mhm.
of Everman Parkway off Michael Drive. And then
Oh,
you go north.
okay.
There's apartments.
All right. I know. I know it's on the south side, and
Yeah.
then and they were selling for really cheap. We looked at one
Mhm.
at one time with a lady, older finance, and
Yep.
and yeah.
I know
Okay.
that lady.
Yeah, you do? Yeah, we looked at one, and Misty, we walked in, and Misty was like, "There's no light on the ceiling." I remember that. And I was like, I'm just, yeah, okay. I
Yeah,
know.
a lot of them had lights on the wall, not on the
Yes.
ceiling.
Yep.
And so, we have updated them tremendously. They all have ceiling fans now. Most of them actually have 2 switches, one
Mhm.
for the fan and one for the light, which they didn't even have switches. They had strings to
Mhm.
Yeah.
turn the lights on and off on a lot of them. So, yeah, they had a lot of potential, but, the potential wasn't realized when we bought them. So
Yeah, those bad boys went up in price a lot too.
Yeah.
I remember when we were looking at them years ago.
thank God.
It was super cheap, and I was like, man, I'm like, this is because
Mhm.
They were super cheap.
they're super cheap, and I'm like, man, what's the story? Like, am I, because
Well, so
then
the couple that I bought the majority of them from had been doing this and had been involved in this property for a very long time. And the lady that you talked to, she had been I don't know if she was there when they were first built, but she was there shortly thereafter.
she was WinStar.
Yeah, no, she wasn't WinStar.
Okay.
But they just the way that they managed the properties, they were very actively involved. They did all their own handiwork.
Mhm.
They did all their own repairs. Their family was involved in operating them. But when it came to leasing, they did not believe in like background checks or credit
Okay.
checks or any of those things. It was just, do you have
Cash.
cash? Do you have enough for a deposit?
Mhm.
And can you pay the first month's rent? So
We believe in background checks and
You
credit
know,
checks. And,
I do too.
I went to school with a lot of people that live there.
Yeah. Well, it's funny because we actually get some applications from people that used to live there
Mhm.
that, when we have one come up. So, anyway, it's definitely different now.
yeah.
But like I said, I think when I bought, they had just leased one of the properties to a new renter. I never got a rent check from that person
Hmm.
ever. So I had to, right after I bought it, that was my first eviction.
Yeah.
And then there was a lot of evictions that happened after that, because we had a lot of challenges, and I don't know, we did set outs. We had to do some set outs, and after you go through a few of those, people start to understand that things are changing.
Mm-hmm.
Yeah.
And so I remember having a conversation with one of the gentlemen from Fort Worth Housing right after I bought the units, because I wanted to raise the rents up to $895 a month.
Mm-hmm.
And this was in 2014. And he told me, no way, we're not going to approve it. I go, what do you mean? I mean, I've done the rent comps, and, these are 1,400 square foot, 3-bedroom units. I mean, 895 is still under market rent. He just said, well, that's not what the rent is here. And, and you need me worse than I need you.
Mm.
So I'm not going to approve it.
Yeah.
I was like, okay, well, have a nice day. And I just went out and started renting to. His view was the only people that were going to live there were people that the housing agencies could put in those properties.
Yeah. And now you're like, no, I don't need you anymore.
I don't need you. So
I'm going to fix this.
I went a different direction. I still have some housing residents, and I think 2 of them have been there since I purchased the property. Great people, but the rents have gone up over time, so they're in line with the property. But so anyway, I made a lot of mistakes with that property in particular, but just the way I financed it, the way I funded it, the way, and I almost went broke as a result of it.
Yeah.
So
I got to ask, did you go through and put lights in the ceiling? I
put
just got-
ceiling fans
Ceiling fan. Okay. Yeah, so-
with lights.
With lights.
So yeah, you have to rip all the sheetrock,
Yep.
run the wires,
Mhm.
patch it
back
up.
Yep.
So we've done a lot of things. We ripped out all the cabinets, put in new kitchens. We've got granite countertops in a number of the units. So they are the floor plan. I still think is one of the best floor plans I've ever seen.
Yeah.
So it's it still has huge potential. We still probably haven't reached potential for the property, but we've made a tremendous amount of progress.
And a lot of new build up around it.
What he's
Yeah.
What he's saying, Misty, is we missed out.
You
On
guys
that- on
should
that-
have jumped on the
on-
opportunity
on
when it
the
was
one-
in front of you.
It was many, many years ago, and I
Yeah.
remember going in, looking at it, and just like, was it a seller finance?
I think it was.
Probably.
And I'm
Yeah.
thinking like we looked at it and we're like, I don't know, man. We do have a rental on Everman that's closer to the
It's
element.
across from Bishop.
Yeah, across from Bishop.
Okay. Yeah.
So
Yep.
it was Misty's first house actually. That's her
Wow.
rental now. So but yeah, so like, we definitely look back. I'm like that's probably so the way is the same. Do the same people still manage it as well? Are they still or
So
how's that work now? Are you
so when I bought those properties, I actually started my own property management company.
gotcha?
And my vision was that my buddy, who was a broker, and I were going to, kind of side hustle the property management business and manage our own portfolio. That didn't really pan out. I sort of got soured on property management for other owners
Yeah.
based on my experience at the other townhomes, which I eventually, I think shortly after I bought these, I sold my interest. I sold my townhome in the Euless property, and just focused on my own property. So I still self-manage.
Mm-hmm.
Did your broker friend own property?
He did not. He was, he was in the real estate side, transactional side, and this looked like it might be a good fit because he knew people that had rental properties, but there was a lot going on, and it really just never panned out. And I think part of it was just my mindset shifted that managing property is not really that difficult. I mean, residents are about consistency, setting policies that are fair and equitable, enforcing them in a fair and equitable way, communicating effectively, all those kind of things. When you're dealing with owners, that's a whole different ballgame, as you probably know.
Yeah, we have a few that, or one or so in particular that we like, but doesn't want to fix anything, and it's really hard to.
It's tough when you get into those situations.
It's really hard. I don't even. It's I like to advertise things that go for lease. I don't even want to take a picture of this particular one. I'm like, it looks bad on my Facebook. Like, I can't be like for lease. There's no pride, and it's just like it's. But I like the owner. I mean, it's
Well,
it's just
the owners all just have different. It's not that they're good people or bad people. It's just they have a business acumen that that drives what they do.
Yeah,
and not everybody thinks that spending money to make money is a good plan.
Yeah.
So, and when you get one of those owners, it's really a challenge as a property manager. There's really nothing you can do about it. You just got to work around it.
Misty just fired one actually about a week ago.
Yeah.
Yeah. They overpaid and they didn't want to do any work, and she's like, I'm out. I'm firing him. And she fired him.
For you.
It's hard, man. It's hard. It's hard doing property management like that. I get it. It's
wanted me to do different processes and take a discount, and I'm like, too much for not enough.
Right. Well, that for me, that sort of summed up the ownership part of it.
Yep.
And why I decided not to be a property manager, but I still have my property management company, and that is still the entity that manages my properties.
Right. Yeah. It's just for you.
Just for me.
Because you get to do it the way you want, and
Correct.
the way you see fit that works the
Right.
best. It's just, you don't have to work.
You don't
have to worry about
argue with yourself.
Yeah, I don't have to argue.
Yeah.
I do,
Yeah, you do.
but I usually win.
Either way, you win.
Meeting adjourned.
That's not true. Sometimes I lose, but I make up later.
You know what? Let's go get a burger. You want to?
Yeah, let's go get a beer. More likely.
I'm hungry. You want a beer? I want a beer. All right. Yeah. So you started managing your own, and you just said that you took it over. You increased everything, built it all up.
Yep. We started improving them, and a lot of people that still live in that community, know which units are ours.
Right.
And, I'll be driving through the property, checking on things, and, somebody will come up and go, hey, you got anything available? And like, man, we really like your properties, And so we have a reputation for kind of being the premium properties within the community, but we're also the premium rent. So,
that's a good feeling though. That's a good feeling when you have that.
Yeah. I mean, we have acquired more of those over the years.
Ask if the owners turn to you first when they want to sell.
Not always, but we have been able to pick up other properties that have come available, and we own about half of them now. So, and it was kind of interesting because I got a call from a large hedge fund last year that was interested in those properties, and kind of freaked me out because
Was it Blackstone
no,
or BlackRock?
no,
Or
it wasn't BlackRock.
BlackRock.
Yeah, and at the time, I was one short of owning half.
Yeah,
and it really got my attention. Now, we have one owner occupant, and then I forget how many owners, but there's one guy that owns 14 now, and then one couple that owns 3, and everybody else pretty much just owns 1, as I recall. No, one guy owns 2. So there's a lot of, so if they really wanted to acquire the entire community, it would take a lot of effort. and they would probably need somebody like me to help them facilitate that
Right.
and make it work. But it still got my attention. I was like, I went up and bought another one.
Got to make it 50.
Yeah. And so now we've got half. And so I feel more secure
Mm-hmm.
about my investment because basically nobody can come in. And I'm interested in buying more. The problem right now is property taxes, insurance, interest rates,
Yeah.
and
The deal's got to be right. It's got to be
deal-
structured right.
it's got to be structured right. And, we're looking at some opportunities, but currently, we haven't been able to put anything together just because of the environment that we're in right now.
So let me ask this: what made what made you look into? And I know, obviously, as far as like contact wise, you had the broker friend that said, "Hey, take a look at these." But what some people steer clear of things like townhomes and those kind of properties.
For good reason.
Yeah. So I mean,
I would say.
what made you? And I mean, I'm familiar with what you're talking about, so I know it was a good deal as far as early on, and now it looks way different than what it did before.
Yep.
It's not going to be nearly as skinny. But what was it at that time that made you say, "Let me"? All right, where some people are always like, "Don't go anything with HOA or anything with the townhome." Like, what made you go that route versus single family?
Brain fart. That's the best I got.
Is that it?
It was just, I was a sales guy. So it was like, oh, a deal. I can't walk away from a deal.
Yeah.
That's the,
everything is to a hammer, everything's a nail. You're just like, oh, cool. Hit it.
Yeah. How tough could this be?
Yeah.
I got 19 of these bad boys, and I got them at a really cheap price.
Mm-hmm.
And, it was, and I knew they had potential because I had run the math, and I knew that they were way under market. So when you kind of put all those numbers together, it's like, oh, this is a potential cash flow beast. I know this is a bad idea. I know this is the wrong kind of property to buy. I know, but as far as the HOA was concerned, I mean, I could sort of step into the HOA and I could get what I wanted.
Right.
So the HOA was no concern because I sort of, in my head, I had fixed that problem with the number of units that I bought. So that was my solution.
Did you end up, let me ask this, because did you end up with a lot of sleepless nights? And that's the stuff people don't talk about, right? They're just like, I bought it at cheap and got this. And you hear, I'm not saying, at least what you see on social media, it's always, the hype, like, yeah, I got this, And I love talking about mistakes and screw ups.
Oh, this was one of the biggest mistakes I've ever made.
Yeah.
And it's also one of the biggest assets I currently own.
Right.
So, it just depends on, that kind of gets back to perseverance in my mind. What do you
held on to it.
What do you do?
Yeah.
And, we kind of banged through it and learned, what we needed to do in order to make it work and what the potential was. And it's been, it's step by step by step. It's not like you just flip a switch and all of a sudden it's awesome.
Right.
And it's still not awesome.
Takes a couple years, things turn around because
it takes a long time, 2 to 3 years, easy, and I don't really remember, but I remember we bought it at the end of 14, and I think we had rehabbed about 8 of the units by the end of 2015. So, we had started making some progress. And then I got the great idea in 16 to go into real estate full time. So, I basically wasted a year.
Yeah.
I call the real estate business the shiny bauble business. Because there is always another fantastic opportunity.
Yeah. You're always staring. Yeah. I get what you mean. You're there's that.
I went to every RIA club I could find in 2016, and I took, lots of courses, went to lots of Saturday meetings, and, learned how a lot of people were doing things. And if you just follow these steps, you too.
Yeah.
you know,
It's
and
it's good to be around people that are doing it. It's relieving and to just get around and talk and
yeah,
hear different stories and hear the things and but yeah, it's very shiny. You can lose focus really fast. You mentioned it earlier, kind of like going back to that. You said you started out in a company that was sales oriented. You guys were entrepreneurial. It's easy to not be focused. It's at times that's like the curse, right? You're like, oh, I can do this. Oh wait, I can do that, and then eventually things have to narrow in. So you spent a year
I
having
spent a
to really
year
narrow.
chasing the shiny bauble in 2016,
Yeah.
and I came like that close to putting myself out of business.
Mm.
Um, after I'd just gotten into business, basically, kind of,
Yeah.
and so uh, I I kind of figured out finally that um, I needed to do something because I was about tapped out.
Yeah.
so so I started rehabbing. And I mean, I had kind of already been rehabbing. We were fixing these properties up and turning them around and making them pretty. So I was like, well, better generate some capital. So I started rehabbing, and that went okay. Um, but it's funny. I kind of got into that lane of I'll call C class property,
Right.
and that's where I was really comfortable operating because that's all I had known. And I had some other buddies that were, doing much bigger, more expensive rehabs and making a lot of money at it. But I kind of took a different course. I had all my materials, my, subcontractors, everybody that was sort of aligned to that kind of product. So when I started rehabbing that kind of product.
Right.
So you got to do a lot more of those in order to make money rehabbing. So I made a little bit of money, but I realized, that's not why I got in the real estate business, was to be a rehabber.
Mm-hmm.
I was really trying to build a portfolio. So somewhere in there, I discovered the concept of owner financing, and we did a few, kind of learned what we were doing, got our feet under us with that. So we started transitioning out of the rehabbing business. We'd still rehab, but we would buy and hold, or we would, owner finance.
Mm-hmm.
And so we just started down the road with that model until we were in a position to be able to, really sustain it, so to speak.
Yeah.
So
What do you prefer? Just, I mean, kind of, because some people, there's such a wide variety of thought process on it, right? Some people are like rent only. I think Robin would always tell Dick, convince me why I should own or finance my properties out. Like he would sit there and like at
well,
lunch.
I wouldn't owner finance my rental properties out.
Yeah. So like, what's your thought process on that? Do you have a certain amount that you like to say, hey, do you walk up and know I'm gonna owner finance it? I'm gonna owner finance this. I'm gonna rehab it, owner finance it, or do you walk up and say, I don't know if I'm gonna rent or owner finance, but we'll see what happens, or do you like, I want this many owner finance and I want the rest to be rentals? Like how do you kind of process that?
Well, so I generally know before I buy something what it's going to be.
Mm-hmm.
Doesn't always work out that way, but I generally have a concept that it's either going to be an owner finance or a rental. And but it's sort of what the market offers you.
Right.
On the other side of that too, So, for example, I bought properties that had tenants in them that looked to me like really good owner finance properties, but they had tenants in them, and they had a lease. So they were rental properties when I bought them.
Yeah.
And a couple of them still are. I mean, I really thought that, things would change and people would decide to move on, but they like the way we landlord, so they've stayed.
They're still there.
And that's fine too. I mean, the properties have appreciated, they're cash flowing. So there's really no downside to them being rental properties. But one of them, I had the residents move out and I immediately owner financed that property and, away we go, because I would have had to put too much money into it to turn it into a rental property in that community.
Mm.
So when I bought it, I had envisioned it being an owner finance property, but it wasn't because there was a tenant living in it paying rent. When that, changed, then it became an owner finance property again. But normally, our owner finance model is pretty specific. We're buying a pretty specific product. And, we have a sales team that is marketing to a pretty specific clientele typically. We're not, we'll sell it to anybody that wants to buy it. But,
Right.
We are marketing to the kinds of clients that have typically bought our product,
Mhm.
I'll say. And so those properties, when I buy one, I'm looking for a pretty specific property that typically I wouldn't buy as a rental property.
Gotcha. Yeah. Certain class of property.
It's a it's a similar class of property that we have actually for our
Mhm.
rental properties. It's just that I don't want a giant yard for a rental property.
Right.
Mhm.
I do for an owner finance customer because that my clientele, that's one of the attractive things is a very large lot.
Mhm.
And so, that's just an example of a difference between the two. So it's about really knowing who your customer is.
Right. When you look at a property, okay, this has all the
It,
everything I'm seeking.
it has everything
To owner
that an
finance.
owner finance client is going to love.
Yeah.
We will owner finance this son of a gun in a heartbeat. Whereas, some of the other properties that we've acquired are great rental properties. And I don't have a big preference. I mean, there's pros and cons to both, right? So rental property, you own the asset, it appreciates.
Mm-hmm.
You get depreciation on it. There's a lot of tax benefits to owning that product, but it requires an active involvement.
Mhm.
In my case, not everybody does. Some people hand it off. In my case, it involves a fairly active involvement to generate cash flow out of it. Whereas an owner finance transaction, you close it, I hand it off to my servicing company. We escrow taxes and insurance, and I get a text several times a month that says we have deposited money into your account.
Yeah.
But, the value of that asset declines over time.
Mm-hmm.
It doesn't appreciate. So I understand all the landlords that are like, why would I get involved in that? Well, it's just another business strategy.
Right.
And it creates cash flow that requires it's the closest thing to passive income as you're ever going to find in the real estate business.
You think some of it comes from, because her and I have had these conversations, we're very, very buy, hold, never really sold anything. If we did anything, it was to move to just get a bigger asset or whatnot. So do you think some of that comes from fear of like holding on? You're like, I got it and I don't want to let it go. If I let it go, it's gonna.
They're hard to get.
They're hard to get. I got to get another one. You're like, dang it, versus if you have
You
a
worked
machine.
so hard to get it.
Yes.
Yeah, if you had a machine that's just kind of constantly bringing those to you at some level, then it's not as hard to let go. Do you think that has something to?
That probably has something to do with it. I mean, everything in real estate has to do with deal flow.
Right.
So, we have a decent deal flow right now for owner finance because you can't cash flow. I can't say nobody can, but I can't cash flow a rental property right now based on the tools I have in my toolbox.
Mm-hmm.
But I still need to generate cash flow. So owner financing allows me to continue to grow my cash flow portfolio in this market.
Right.
So
it depends on. So it's the market. That makes sense. Let me ask this, and this is another one. Everybody has different takes on it. Her and I, for a long time, we're always like, never pay it off. Let someone else pay it off.
Yep.
And as time's gone on, we've had more conversations. We're like, honey, I think I want to pay that one off. Let's go pay that thing down. How do you feel about that just over the course of time? Do you try to? I know like Robin does that. He's trying to pay these things down. Some people like don't do it. Like, what's your preference or your thought on that as far as like the rentals and stuff? Do you like to pay it down? let them pay it down, the tenant, or
I have my current philosophy, and I've had this discussion with the friends of mine that have a very different viewpoint. So let me just frame it that way. Mine is not the answer to that question.
Right.
It is my opinion
Yeah.
on, how I operate. And my opinion is I never want anything paid off in terms of a rental property, because now I got way too much capital tied up into it. And, part of the return in the real estate business is leverage.
Right.
And, you have to manage the leverage in a way that you're comfortable with, but the returns are very attractive when you do that in a, I'll say, sensible fashion, because everybody's definition of that is completely different.
Right.
And I have friends of mine that are selling off assets, and have been for the last year. As if they're not able to rent a property, if somebody doesn't renew, then they just sell it, and they take that money and they pay something down. And I think that that's probably a very balanced strategy for the situation we're in right now. So
I think you lose out on that though. Like if you do that, it's just, because if you sell it, it's no longer, it's gone. Like it's
gone, but you've now improved your balance sheet.
Right.
So, are you going to be able to find another asset in this market that to replace that asset with? Probably not. But, what's your time horizon? If it's 5 or 10 years, then why not put yourself in a position so that, I don't know, 3 or 4 years from now, maybe that's different.
Yeah.
I don't think it's going to be different in another couple of years, but that's just my opinion. But it will be different at some point, one way or another.
Yeah.
Because I don't think where we are is necessarily sustainable and not where we want to be. So it's going to change.
Yeah.
Hopefully for the better.
Yeah. With interest rates and stuff, it's definitely going to be.
It's definitely going to change.
Definitely a lot harder now. So let me ask this: crazy stories. All this time, obviously, some of the tenants and stuff. Well, what's some of the crazy stuff you've come across? I always like to hear those too. Anything that sticks out where you're like, man, that was a wild one. I almost got shot, or so, I don't know.
Well, I could have. I didn't, thankfully, just because nobody was packing at the time.
Yeah.
But yeah, we had a property that we bought. I bought several properties from this guy. This house had tenants in it. Again, perfect owner finance opportunity. But it had tenants in it, and he was tired of dealing with the whole tenant situation. And he was somewhat upfront about what the situation was, but it was weird. There was like some other group of people that was helping pay rent for the person that was living there. And, I was like, I don't care. Well, I'm good. At the price you're selling it to me for, I know that I'm in for something. I'm not sure what, but I know I'm in for something.
It's a good deal.
It's a good deal. So, we bought it. While they were living there, I had the foundation leveled, and we stripped all the siding off the outside of the house and put, new Tyvek and new OSB and Tyvek and siding. We did the outside of the house. We put new windows in it. We did all that while the tenants were living there. We didn't touch the inside. We just did the outside, painted it, patched the roof, all that stuff. And I guess this was kind of during COVID. At some point, I don't remember exactly what year it was, but it was during the pandemic fund. And anyway, I think I only collected 1 month of rent. And so I went over, sat down with them, literally sat down on the couch with their phone, showed them where the agencies were that could provide assistance, and said, you need to apply for assistance. They never did. So went through the eviction process, went to court, and they filled out the COVID form that said, we've been denied assistance. We lost our job because of COVID, all that stuff. Judge threw it out. I use a lady who is really good at the whole eviction process, and I hired her, and she went back and challenged the ruling, which I didn't even know you could do, but she did. So we went back and challenged the ruling, and so the judge said, well, it says here that you got fired because of, COVID. What do you have? And she gave the judge, he goes, well, it threw it out. Said that you just, you got fired for not showing up.
Yeah.
And it says here that you've been denied assistance. What documentation do you have? So she handed him my email that I had sent listing all of the agencies that were available for assistance.
Mm.
And he said, so
Which
have
one?
you applied? So he threw that out. So I won the eviction, but nothing happened. So we had
Still
to get
there.
a writ. And so we show up with 3 constables and the crew to do the writ, knock on the door. Nobody's answering. And so it's like, well, I know somebody's in there, but, they're just not answering. So they come with me. We go around to the back because there was on the back of the house, there was a sort of a utility room, but it was just full of stuff. You couldn't really get to the door, but the door didn't close and it wouldn't lock because you couldn't get to it. So I pushed the door open. I got a constable behind me. I pushed the door open enough to just start knocking stuff over and pushed the door open. And there's a guy sitting on the couch smoking a joint right next to the front door. So the constable stepped in front of me at that point and took over, and we moved everything out onto the front yard. And
He had watched that Cat Williams, the guy where he's like, Cat Williams is like, if you ain't smoking weed, I don't know what you're doing.
yeah,
One puff and fuck it.
yeah,
That's what that's
it.
He's like, I am not gonna open the door. I don't care.
I don't care. They're going to have to come get me. So
That's exactly what he was doing. Sitting on the couch, just going, fuck
it's all good. What could possibly go wrong?
Yeah. Did he look over and was like, you want some?
No, he saw me and stood up and said, "Oh yeah, blah 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 is not here." It's like, yeah, I see that.
So the person the person sitting there, was it the same one that it wasn't the same one that?
No, it was a relative that that sort of lived there that wasn't on the lease kind of
Yeah.
deal.
It's
And
usually the case.
I mean, my perspective on that was that this was, a family member's house,
Mm-hmm.
and the person that was living there felt they were entitled to that property.
Mhm.
Right.
The family had, wasn't able to support it. They couldn't, so, but the family members that were there were just like, hey, this is our house, we're staying.
Mhm.
And so it was a really interesting dynamic, but the reason they sold the house was to get the family members out of it.
Yeah. But it
So-
didn't happen that way originally.
Well, it did.
It did.
Eventually.
Eventually. But
And I think they were trying to encourage them to do that. And, this is sort of my perspective without any conversations with anybody, just watching the situation evolve over the
yeah.
course of months. And, we owner financed the property and turned out just like we expected.
What about most memorable deals? Anything that maybe on the other side of that, where it's something that maybe it was a home run, or they kind of was like, man, that really worked out really, really well. maybe even smooth or just something that,
Smooth. That's funny.
yeah, right. I know. Yeah.
We are in the distressed property business.
I know, right. That's
Our definition of smooth may not necessarily.
that should be a sub or a little just section on the podcast. What was your smoothest transaction?
Yes.
Bumpy.
Yeah. The bumpy. What about maybe something that came about that could have been a home run or something that worked out? Maybe it's owner finance or something that just like that was a really good deal. You walked away and like that was killer.
I know there had to be some.
He's like, there's more on the other side, right? That were
there's more on the challenge side than the smooth side. I thought I had one that I could have described as that, but it fell through last week. So we were that close to having a great story.
Don't those hurt?
Nah.
I mean, but I've been saying like it makes you go, dang man, like you come across one and you're like,
it's so my whole outlook is two things. One, it could always be worse.
Right.
No matter how bad you think it is, it could always be worse. And two, never get too excited until the wire transfer hits.
Yep.
Yeah.
I mean, it's great to get a contract and it's great to go through that whole process, but even after everybody's signed and closed, until the funds show up, I don't celebrate anything.
Yeah. Yeah. I agree with that. It's easy to it's the night, the little steps along the way, but it definitely I don't like telling anybody if you're buying something, I'm very like, she knows, or you know what I mean?
Right.
Or something like, I don't want to tell anyone because if you tell somebody, then it's like, to me, it's almost, it's almost like you jinx it,
There's so many little twists and turns, in every transaction that, so many potential, things that could kill it. Really, if you think about it, I mean, yes, this is a great property. We're going to sell it. It's not, I'm not worried about that, but it was almost too good.
Right.
I mean, we had just closed on it, and like a day or two later, we got a contract on it, and 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 it was the second contract that we had gotten that week. So it was just like, things are just going too well.
Yeah. the force of average has to come in and say, no,
Exactly.
no. It was too good, too easy.
Yeah.
Let's throw him a curveball.
Exactly. So, that's I'm more comfortable with that environment. It was kind of freaking me out, actually. I was almost glad it fell through. And it's like, okay, all right.
So let me ask this, because I we have a variety of listeners from, new investors to, and I mean, even like real estate agents. We have agents that listen as well. And you mentioned something about that first year when you said, I went full time, and you're like, and I about lost it all doing it.
Yep.
And part of that was a focus thing. You mentioned part of that was just being focused and zeroing in. Like, what got you through it? What made you either get focused, or what made you kind of zero that in? Because I see that's something that I know, just even on the agent side of stuff. We have agents in the brokerage and things, or even just investors. Friends that are trying to get started. Like, what made you say, okay, I got to get focused and zeroed in? How'd you kind of get through that first year, and then I guess turn it around? What was it that you would?
Well, I think it really just comes down to, do you want to succeed or fail?
Yeah.
And I used to have a boss that he had a great saying, and he always would tell you, you need to be intellectually honest with yourself. And, that's kind of what it comes down to. So you said you wanted to be a real estate investor. Now here you are. What are you going to do? You're going to pack it in? You're going to go get a job? Or are you going to figure it out? And it's interesting because one of the things that I didn't mention back in my Beach Street days, right, when I was going to Robin and Cindy's meetings religiously, I ran across a guy, and he and his family owned like 500 plus houses, and a lot of them were in that neighborhood and other similar neighborhoods around Fort Worth,
Mhm.
and I went up after the meeting and started talking to him, and I said, hey, I had looked at a lot of these houses that you guys own down in that area, and I'm just curious, how do you collect rent? And he kind of, gave me the side eye, and he's like, we don't collect rent. We have a little building in the neighborhood, and we've got a safe that's in about 4 feet of concrete, and people come over and they put money in the box, and if they don't, we evict them. And we've gotten so good at evictions that we actually started an eviction service for landlords.
Oh.
And at that moment, it was like an aha moment. It was like, the challenge with this business is that you always enter it based on your own context.
Mm-hmm.
What your experience level is, how you think things go, how you think things operate, how you think things should turn out. And that's not how this business works. It's very entrepreneurial. And what you have to do is get out of that mindset and realize that there's a solution to every problem.
Mm-hmm.
You may not like it, but there's a solution. And I think it's still a huge weakness for me because some of this stuff is just so baked in that every transaction you enter into, you kind of enter into it with a boundary mindset.
Mm-hmm.
These are the boundaries for how this needs to go. And you really have to work hard, I think, at expanding your perspective and realizing that there are no boundaries. And I think it's Bill Cook that actually, has a no box transactional strategy. And he really does. And that's where a lot of the really successful people in this business operate, is the no boundaries mindset.
Yeah. Willing to get creative and
Yep.
figure it out and say, okay, well, we can go this route instead of go that route. Here's a couple options for you. We can buy this way, we can buy that way.
Yeah. And I mean, there's not a couple of options. There's 432.
Yeah.
And that's what everybody forgets. Everybody's like, well, we could do it this way or this way. And, if you're really listening to what's going on and trying to solve a problem, that doesn't have, the two things don't have anything to do with each other. It's, how do you have to structure it in order to make it work?
Mm-hmm. It's
And
the creativity. That's what I enjoy of it. It's creativity is because they never look the same. Like stuff I try to put together where maybe it's a template or like a letter I'm going to send out. Like I'm going to send this out to everybody. I'll make it like that. But I'm like, shit, I got to go back and retype something. There's you can't just, as much time as I spend doing systems and processes for the brokerage, some of the stuff you can't even do for offers and things like that, because you might offer it this way and then this one's like, well, this person will do a down payment and this one we won't, it's going to be cash, but it's this and there's this tied to it. Like it's almost hard to, it seems like it's almost hard to create that into a box. If that
Yes.
makes any sense. It's the creativity. I get
really
what you're
is.
saying. Like it's creativity.
It's
you get to just
creativity.
be so creative with it and it never stays the same.
right.
And that's that entrepreneurial curse of, there's, I can do this, I can do that. I know I get like that. I'm like,
Well, it's funny. I just attended a seminar recently, and they were showing business failures
mhm.
and the trend of when businesses fail. And you would think that, after a couple of years that the failure rate would go down, and it doesn't.
It goes up.
It goes up.
They get
And-
bored,
Yeah.
less
And
creative.
it's very possible.
Is that what they when they were showing that? Is that what they said, that it's the creativity thing? Is that what causes it to?
Yeah, I'm trying to remember exactly what they said. I mean, I got that and stared at that for a minute and kind of, and then everything in the background was just wow, 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 wow.
Yeah.
Because I was thinking, holy crap, I'm there. I'm exactly where they're talking about.
Yeah.
And, but it does have to do with, I think, adaptability. No
Mhm.
matter what you're doing, you have to adapt to the market. And I think real estate is a great example of that because last year I was buying rental properties. This year I'm not. I have a friend who is, but he has a completely different business strategy and outlook on why he's buying rental properties. And
Yeah.
he doesn't care if they cash flow. He's more of he views rental properties more like a mutual fund.
Hmm.
You buy them every year no matter what.
Yeah, you keep it going.
Keep it going. And, and he has a W-2 job. So he's not, they don't have to cash flow.
Hmm. Yeah, that makes sense. I think, just kind of what you mentioned where you said they go business at a certain point. I think some of it is, I think you said business owners get bored. That's probably part of it. They're probably less creative. And I think it's just, obviously landscape changes as well, depending on the type of business probably
I
has
think
lots
part
of
of
it.
it's burnout too.
Burnout. I've
Because,
experienced that.
yeah.
I've experienced that, not with real estate, but I've experienced that before twice in the
Well,
same business model.
if you're in real estate long enough, you will.
Yeah.
Depending on how you approach it. And that was sort of the point of this seminar was that, are you really in business or have you just traded one job for another?
So that was the difference. So my burnout came from martial arts, running a martial arts school.
Yep.
Constantly there. I love jujitsu, but I got burnout. Been burnt out twice, and it's the hustle and bustle. So as we built the brokerage, I was like, I'll never work in the business again. I'm gonna work on it. I want to work on it, and then my job is to get her out eventually to where she's not working in it. She's working on it. She's on it. She's in it now because that was what you wanted, honey. But I was like, I never wanted to go back because I knew that feeling. I keep telling her all the time, like, honey, you keep doing that, you're gonna end up right where I was, and you're gonna be burnt out and hating what you're doing and wishing you didn't do it. Start it now and get yourself out because I can see that. But I think it's more fun though when you get a chance to work on the business than it is.
Well, that's
work in it.
Yes, and that's really where you want to be.
Yeah,
is working on the business. Because the other point they made, which I thought was a really interesting point, is that if you have an entity that requires, 40, 50 hours of your time, you don't have anything that has any value.
Right.
What are you going to sell?
Yeah, once you die.
If they buy it from you, who's gonna fill that slot? So, it just put a lot of things in context.
Yeah.
And
yeah. I know that feeling. It's a hard feeling to come back from too. Once that burnout hits, it is hard to come back and say, okay, I'm back. I mean, something's either got to jolt you back in to make you go, okay, I'm back. Or, it really,
you change processes.
You watch it, you've seen it. What do you, on the outside of stuff, you've watched it before. I mean, when you see it, what do you,
like
the burnout, you've seen it. I mean, from the outside looking in.
I think you have to reevaluate
things. Yeah.
And see what's important. And if you want to continue, then you got to set up better systems and processes and have different goals.
And certain businesses aren't the same. Every vehicle is different, right? I mean, like you said, the one he's buying mutual funds and
right.
So every business is obviously different, which means,
well, the processes are different. The SOPs are different. All that's different. But if you're working on a business, you're basically going to be working on very similar things no matter what business it is.
Right. It all needs marketing and sales and
right.
It's just how and who can do the job.
Who can do the job, how you structure it.
How long it takes to train someone.
Yeah.
Yep.
How you train them. That whole onboarding process. So I think there's a lot to that concept. And it was a really good thing. I mean, I have a friend of mine, because I've been working in the business for a long time, and really part of that was because it's what I wanted to do.
Right.
So when I got into real estate, I never really got into it to do anything more than create a path for me for something that I could do for the rest of my life.
Mhm.
Because, I know people that have retired and are really bad at it. And I know people that have retired that are really good at it.
I would be horrible at it.
And I am not good at it.
Yeah, I'm with you.
So, but doesn't mean I don't want free time and I don't want to be able to travel and I don't want, so that's sort of been my approach. And I probably could have done it a lot better than I have, but, I kind of do things my own way.
Yeah.
And they haven't turned out terribly. So, I got that going for me. But, I'm not the wonder kid of creating a business model. And, but I have managed to do things in a way that, I don't have employees. I don't have to do.
Mhm.
I do because I choose to do. And
Yeah.
so that was really important. That was one aspect of the business that was really important to me. Now I have a panel van and I, would go pick up materials and drop them off so the guys didn't have to waste their time picking stuff up. And I got a buddy of mine that just hammers the crap out of me. He's like, "What are you doing?"
Yeah.
And he said, if you're doing $10 an hour work, you're probably not spending your time where you should be focused.
Yeah.
And, I go, "Yeah, you're right. But I got to hang up now because I got to go unload some sheetrock."
I think real estate is one of those. I've just the business we came from originally years ago that kind of started everything because it was full time, like teaching jiu-jitsu. It takes about 2-3 years to get a really good coach to actually take over your spot, and then that's if they're good. So that the lead time, whereas like to plug someone in and say, "Hey, go pick up some sheetrock," when you're ready to get rid of that, that's so simple. I mean, all they need is a
You
truck.
can have somebody next day.
Yeah.
It's not a hard.
It's a skill that I can do, so it's not that hard to replace.
Yeah, it's so. I think it's so simple to replace. There's so many things that go on in the business of real estate that are very scalable and replaceable. Where certain businesses, it's just you
tough.
can't do it. You know what I
Yeah.
mean? Or I think about, and I know this isn't real estate, but I think about those jobs. Like I remember my first job was Crystal's Pizza, and it was a bunch of teenagers. I don't know how they didn't go under any sooner. I mean, I have teenagers that work for us at the academy. I'm like, fuck, do you guys pay attention to anything sometimes? Like, you just want to like wring their neck because you're like, you guys don't, they don't take the same pride. And I remember when I was 15, my first job I was 14. I didn't take the same pride, but real estate has so many. That I don't know why anyone would ever want to scale those type of businesses that require that, having that demographic as your employees. That would drive me bonkers. But at the same time, there's so many things you can scale in real estate. I think that's so much easier.
Yeah.
So much easier. You can the sheetrock. You can when you're ready, you can turn yourself into a professional check writer a lot faster than anything else. I think. That's just my.
Yeah, you're probably right about that. I mean, there's examples of a lot of people that have done that incredibly well.
Yeah.
I'm not particularly one of them, but
Yeah.
they're out there for sure.
But it happens. It can happen quick. It can happen a lot faster.
Yeah.
So. Well, man, what advice before we kind of ended up here? What advice would you give to someone who's new and just kind of maybe they're getting into the game and they're like, you took the jump, you listened. That's something that somebody doesn't do often. But what would you give to someone who says, hey, this is this is something that this I'd give you, advice wise.
So, like I said, this is the shiny bauble business.
Yeah.
And all of the courses and everything that I went to and all the gurus that were speaking, what they did was they kind of did their own SWOT analysis of themselves.
Mm-hmm.
And they really figured out what their lane was and what they were good at. And they went out and created something that was repeatable for them based on their skill set. And they did that enough times that they built a track record, and now they're out teaching other people how to do it. And it's not that it doesn't work or it wouldn't work, but, you may not have the same strengths and weaknesses that individual has.
Yeah.
So what I would tell you is that education is really important, and learning, hearing how a lot of different people are doing things is really important. But doing your own personal SWOT analysis is critical to figure out what your lane is.
Mhm.
And, and then my advice would be figure out what your lane is and stay in your lane, because that's the biggest challenge. And I still have that challenge from time to time. And, we figured out what our lane is, and it's working really well. And there's really, if everything's working, unless you can find an adjacency that, can grow what you're doing, leveraging what you've already done, then it's probably not a great idea unless you got this thing running so well that you're just going to go start something else.
Yeah. Yep. Stay your lane.
Stay in your lane.
I like that. That's huge, man. That's a big deal. People, that's that entrepreneurial curse. You want
Veer off
to
to
be in
this.
every lane. Why be in one when I can be in
Well,
20?
you can make a lot of money quickly in real estate. And, once you do, it's really hard not to go, okay, well, now I'm just going to go conquer the world.
Yeah. Yeah, absolutely. Man, how can people get a hold of you? Anyway, I know you've got a website and stuff. You want to share that? And
my email is probably the best thing to give people. I have a website. It's billbuyshomes.com,
Mm.
but I just have a website because I'm supposed to. So that's my email, bill@billbuyshomes.com. And if you have questions, I'm always happy to assist or point somebody in the right direction. Or if you got an awesome deal out there, obviously I'm stupid enough to buy it.
yeah, give a call. That's it. And that's huge, though. I read, that's what, anytime we talk to people, like, contact, because you might be able to take a deal down that someone else is like, it's just not for me, and that's it.
Mhm.
Well,
That's it.
that's mostly what I get,
Yeah. Like, that's
honestly, is
like-
something that somebody else has already passed on.
You're like, I'll take it.
Yeah.
Oh, cool, man. We loved having you on. Thank you very much for coming on. Thank you for sharing your stories, and hope to have you on soon, another time.
Okay,
Thank you, guys.
Enjoyed it.
So have a good one.
appreciate it.